How the heck are you guys doing? So you're saying spot the patterns and just follow set rules? Man, Rob, some days that works out better than others. It's interesting, guys, because it takes a while. It takes a while to develop the trust. It takes a while to be able to feel comfortable and confident getting into trades. It takes a while to be able to manage trades, guys. And there's a fast way and a slow way, I promise you. And this whole classroom is dedicated to the fast way. The whole classroom is dedicated to getting you to where you want to be sooner than later. So let's do that again today. Feeling great today, guys. You're in trouble. You'll help me get there? Thank you, Ron. You guys know I need all the help I can get. Let's check news, man. 8:30, we had a lot going on. I really wasn't watching my charts when it happened. Today was pancake day. But there was advanced GDP, QQ, unemployment, core durable goods. Guys, there was news all over the 8:30 hour. Did it make the market bounce any? Good morning, Morgan. Did it make the market jump? Did it create? It did? Yeah. And you guys knew about it. That's the best thing. Is you knew that when high impact Red Rob, if there's not rules written on that chart, I am flying to Illinois and we're gonna have words. Fisticuffs, my friend. What's a stock, Christine? Why the hell would anybody trade a stock? My stocks are going down when everyone in my room is just going short. You don't look like you have any indicators on there, Rob. Get with Jason, let him fix it for you. You can try to refresh data and see if that works. And if it doesn't, get with Jason. That's what I do. If I ever get the gray chart, it just means that for whatever reason things didn't jive. I will refresh data. Right click, reload all historical data, and hope for the best. And then if that doesn't work, I start crying to my brother. You guys have Jason to cry to. I go straight to the source. So guys, every morning I check news. Every morning I'm making sure that I know exactly. Well, then just shut it down and go to the doctor. Jason will get you fixed when you come back. I like to know when there may be an emotional response, guys, because we're joking in the beginning of the room in the chat box here. Everything is patterns. Everything is rules. And when there is high impact news, when there's medium impact news, those patterns can change drastically and at a moment's notice. Typically with no notice, to be honest with you. So most of the prop firms, the funding firms, tell you that you can't trade into news. And as a general rule in my own trading plan, I don't trade 2 to 3 minutes before. I'll exit a position if I'm in it, and then I'll watch the market and I'll wait for it to feel like it's tradable again. There is no set time frame. I've watched news move the market crazy for an hour, like a FOMC day, and I've also seen it last for 2 minutes. So I'm watching it and I'm gauging it. I'm saying, okay, I'm comfortable trading again, and that's when I get back in. But I check that every day, guys. And then what I'm going to talk about today and what I talked about yesterday and probably what I'm going to talk about tomorrow, to be honest with you, is going to be found on the Nexgen page. Richard, nice to see you back in here. Day 2 clicks a little more. You'll dig it. Day 2, you're like, oh, wait, that word makes sense today. Guys, there's no secrets. There's never been secrets. I have zero desire to have any secrets from you. I want to give you guys everything that you need to be successful. So my promise to you is that I will give you everything that you need to be successful in this first hour or so, guys. And we're going to do it initially with what we call a high probability trend trade. This is our first hour every day, guys. A high probability trend trade is a trade that teaches you to read your indicators. That's really what we're doing, guys. To recognize patterns, you need to read your indicators. To understand your rules, you need to read your indicators. So what we're going to do is we're going to focus on being chart readers first. And your ability to read charts is going to turn you into an amazing day trader. That's the goal. Because once you understand the information that your indicators are giving you, you're going to understand where the market is likely to continue. And initially, that's going to be your entry for the highest probability trend trade. You're going to understand where the market is likely to go, and this is going to help you make good choices on targets. And then you're going to understand where the market is likely to stop, which means that you're going to have this advantage of not trading directly into an area that could reverse the market, that could stop the market. You're going to have this idea when there's room to your profit targets, and you're going to do it from a quick glance at one chart. And guys, all of this chart reading is about 90% of your day. It is literally a whole lot of doing nothing when you're a day trader. And it's the weirdest thing ever. My brother used to say, you know, if Elon Musk called you and said, hey, I've got $250,000 job for you, but I need you to sit still for about 8 hours, and then 20 to 30 minutes out of the day, you're going to click a couple buttons when the rules are met. Everybody would take that job, but most day traders would get fired from that job because we hate to do nothing. I'm a big fan of distractions on the side. I'm a big fan of playing video poker or drawing or doing anything other than breaking my rules. And guys, there's not a lot of rules to follow. This high probability trend trade that we're going to talk about only has 3 rules. These 3 rules turn you into a chart reader. These 3 rules are designed to give you an advantage individually. So your first rule, strong trigger lines, is going to give you the advantage of momentum. And momentum is key, guys. It's a huge factor in everything that we do, because momentum can push the market, and momentum can break areas, and momentum can cover mistakes. And guys, there's a reason momentum is the first rule that we look for, because it's such an important rule when we're looking for a trade. Your second rule is going to keep you from trading into those areas that may stop the market. It's going to allow you to have room to your profit targets, and we're going to call that the advantage of a clear path. So we're going to take momentum and we're going to couple it with absolutely nothing in the way. And I want you to picture the biggest, baddest truck rolling down I-10 through the middle of the United States at 110 miles an hour, and it's just hard to stop it. And that's what these first 2 give you. Once you understand momentum and a clear path, guys, and it's not a long trip to get there, you'll be able to really incorporate that into a lot of ways to make money with the software. But initially, for the high probability trend trade, guys, we're going to define where the market is most likely to continue. That's what rule number 3 does for you. Rule number 3 is unique to the high probability trend trade. It relies on momentum. It insists on a clear path. And then, guys, we're going to use a little bit of precision to pinpoint exactly where the market is likely to continue. And rule number 3 is going to change as you grow. Rule number 3 is going to morph a little bit when you become a chart reader. So what we're going to do is we are going to talk about these 3 rules. Let me see if I can put it on the slide that I wanted. We're going to talk about what they look like. We're going to talk about the advantages and what they mean to you. Excuse me. I'm going to show you how to study them. I'm going to show you how to go back and become comfortable with them. And I'm going to give you a rock solid plan that revolves around this high probability trend trade. These 3 rules are going to happen on only 2 charts. And that's it. Just 2 charts. It's tempting to add more charts. It's tempting to add more rules. It's tempting. Awesome, Rob. It's tempting to try to create more rules, more scenarios, more ideas to get you into this trade. But it really doesn't have to be difficult. I promise you that. I was having an awesome conversation with someone this morning where he took 2 perfect high probability trend trades exactly to the rules, and he tried his damnedest to add rules to it. I'm like, dude, it did everything it was supposed to do off 3 rules and 2 charts. So guys, your large chart leads the way. The large chart is what's happening in the market. It's the temperature of the market. It is what the people in charge of the market want to have happen, guys. And on the most current bar, on the large chart, let me get my laser pointer, pew pew. On the most current bar, the first bar on the large chart. It will define the direction of the market and tell you exactly which direction you should be looking for your rules to be met. It's going to define the momentum of the market, making sure that you have that first advantage through rule number 1. And it's also going to define any areas that might be problematic, and it's going to do that through rule number 2, guys. 66.66666% of your advantages come off of the large chart. And guys, your rules have to be met here. But when they are, you're going to turn your attention to a small chart, a fast chart, a refinement chart, if you will, guys. And this is just your entry chart. And this entry chart is going to pinpoint exactly where the market is most likely to continue. You're going to have a set of rules to find that area. This is going to allow you to reduce risk. It's going to allow you to maximize your profit potential. And that's what rule number 3 is for, guys. Rule number 3 is designed to get you into the market at that best of the best spot. And we use these two charts because they're really an idea of who's in charge. And which side do you want to trade with, guys? The large chart is the large crowd. It's the opinion of the large crowd. These are the people, the guys and ladies that have enough money to create trends. These are the men and women that have the force behind them to establish that momentum. And this is the same group of people that's going to react right at those key areas on your large chart. And man, these guys create the world's greatest, most profitable lazy river ever. All you have to do is fire up your pina colada, put on your shades, and go with the flow. But there's always a group that fights. There's always a group. Some of you were in that group. Leather jacket and wear it, cheap dime store hoods, guys, and they love to fight the system. And they love to fight the overall trends. And they love to fight all that momentum. But these guys fail 70 to 80% of the time, guys. So what we're going to do is we're going to pinpoint, using the small chart, exactly where they're most likely to fail. That's what rule number 3 does for you. It waits for this little shove that they create, and it puts you into the market at the best of the best spot. And the cool thing is that if these guys lose 70 to 80% of the time, well, then your rules for the high probability trend trade have the potential to win 70 to 80% of the time, guys. And the whole reason that we're here, the only reason you should be here, is to make money, is to get paid. So this gives you the advantages that you need to have a trading plan that is very simple, easy to learn, and gives you the opportunity to be profitable while you continue to grow as a chart reader. And there's an easy way and a hard way. I love this part. So to get to where you want to be, ASAFP, guys. Post your trades in the room. Show me what you're doing. Talk about what you see. Tell me what your chart read is. You were given capture software when you started in the room, or when you started with Nexgen. Actually, it's part of the downloading process. Let me open mine up here. But TechSmith Capture, guys, it's on there. If you go to your search bar right here and you type in tech, you're going to see TechSmith Capture. Open this up if you've never used it, because this is how you and I have a conversation. So every time you post in the room, it's like getting a private session with me. Every time you post in the room, you create the scenario for a one-on-one conversation, guys. And this is your capture software. This is what it looks like. And I'm going to pull up this picture to use it. We'll pull up this picture. Since we trade two charts, it's important that when you click that big red button, you click and drag and show me two charts. And every time you do this, you're going to click the camera button. It's going to give you an image preview, and it's just the picture that you just took. So every time you show me a chart, guys, I want you to talk about the momentum on that chart. Every time you show me a chart, I want you to talk about whether or not you had a clear path. And every time you show me a chart, I want you to use these little drawing tools, and I want you to show me exactly where you got in, and I want you to show me exactly where you got out. Because what this does is this is how we develop the ability to become chart readers, guys, by showing me what your reads are. And if you did something wrong, you're going to get feedback. And if you did something great, you're going to get praised. And if you have something that maybe could have reduced risk or increased profit potential, we're going to talk about it in every picture that you present. So click this upload button in the bottom right hand corner, and what it does is it sends this picture to the cloud. The same way Jen just put a picture in the room, I'm going to copy it and I'm going to paste it right in the room, and then when we get to the second hour, I'm going to go back to your picture and we're going to talk about it. We're going to talk about momentum. We're going to talk about your clear path. We're going to talk about everything that you just told me, and we're going to see if there's a way to do it better, guys. And that's the same thing that we do every day. So post in the room, such a big part of what we do. The second thing is track your real-time performance in a spreadsheet. Once again, when you downloaded the demo, guys, you got this spreadsheet. It's in there, but I'll give you a copy of mine because I update mine every day. I steal trades from you guys every day to put into my study guide here. Your first page is the copy of your tracking. This is where every time you take a trade, win, lose, or draw, live money, simulator, doesn't matter. Every time you take a trade, you're gonna post it into this page. You're gonna talk about how you felt. And guys, this is such a big part because there's quite a few different ways to feel, right? You might be relaxed or nervous or confident or jumpy or frustrated or bored. And I promise you, how you feel going into a trade is going to reflect a lot on your ability or whether or not you're following your rules. You're going to talk about where you're coming from, what the advantages were. And then over here in notes, feedback. Guys, I'm going to give you everything that I have rattling around this cavernous brain of mine to help you become a better chart reader. All you have to do is ask for help. When you get that help, drop it in the notes section. But don't take pictures and ignore them. Don't post them in there and ignore them, guys. This is what makes the spreadsheet work. Actually coming back and looking at what you did yesterday and saying to yourself, man, what did I do yesterday? What worked and what didn't work? And what felt easy and what kept me relaxed? And then you're going to begin to recognize stuff. You're going to recognize these patterns that are bringing you success. And you're going to focus on them every day. You're going to wake up and you'll be like, oh my gosh, this was so easy. I'm going to do it again today. And you're also going to notice the stuff that may be taking that success from you. And then you have that clarity. I'm not going to trade in determination conditions today. I'm going to wait for momentum today. And guys, if you go back and study every morning, it will prepare you for the day. It will accelerate the learning process. And these patterns that you recognize become very important to you because that's what's going to fuel your success. And then going back to the dead horse, when you post in the room, and I promise you this, when you post in the room, I'm going to begin to recognize the patterns in you. I'm going to begin to recognize if maybe you fight something, or if you're early, or if you're late, or if you seem fearful. And I'm not going to chastise you for it. What I'm going to do is I'm going to help you hand in hand to overcome that, to get to that next level. So, guys, take a lot of pictures, record a lot of pictures. So your second page are just your high probability trend trade rules in green and them not being met in red. And this becomes a great study guide. I'm going to give you a way to do that. There is a tab that's designed for you to create a trading plan. And then there's the client trades, guys, and this is where I humbly thank you because I've been stealing trades from you guys for a long time. When you do stuff wonderful, when you follow rules, when you find success, when you embrace advantages, guys, I've got like 380 pictures in here, 390 pictures, somewhere in there, of you guys doing great things with the software, of you guys using momentum, using that clear path, embracing those entries, and finding success. So if you're brand new, guys, you've got the world's greatest study guide right here. I've got the entry sequence and how to perform it for longs and shorts on the high probability trend trade. There's a section dedicated to NASDAQ. I won't tell you guys how or what to trade, but I will tell you that if you're not comfortable with your rules, if you can't pick your rules off of a chart in a matter of seconds, NASDAQ is going to be like the Tasmanian devil on meth to you, and it's very, very difficult to trade. There's a whole section dedicated to management. There's patterns that repeat themselves, guys. There's a whole section dedicated to termination conditions. Your goal should be to make your favorite look section look like the one that I put a little elbow grease into. And if you do that, you'll be absolutely floored at how easy it becomes to read your charts. So we're going to learn the rules. We're going to talk about them. We're going to discuss them. we're going to say to ourselves, man, this is when it's okay to trade, when these rules are met. Simulate, practice, break eggs. Don't feel like you have to be great at this to get in there and try. Just post the pictures in the room, because even if you have absolutely no idea what you're doing, we'll go through and we'll turn every picture that you post into a lesson, right? So Christine just posted in the room. Christine gave me 2 charts. Distance between the triggers on the large chart, she recognizes momentum already. She waited for conflicting triggers to clear. What does that mean? That means that everything agreed with momentum. She jumps in, makes a little money. Oh, Christine, you're losing money. Jumps in again, jumps out. So what would we tell Christine here? Christine, we'd say, gosh, look at that momentum and clear path. Let's get in a little earlier. Once we clear trouble, make a couple bucks and get the hell out. And then once we hit something, let's sit on our hands. Nice job, Christine. But this is how it starts. You've got to get in. No worries. So what we're going to do is we're going to get your ATM strategy. You have it in place. But if you're just jumping in, you're going to hit buy market. But you should still have stops and targets in place. D, this is just jumping in. This is nothing more than momentum and a clear path. And she just jumped in. Yeah, that's, Ron would call it, I call it the chili dog with Ron. But what happened is she jumped in here and got stopped out here. And then she jumped in, oh, she tried to go short against all the momentum. Christine. No worries, I got you. We'll go over it after we talk about rules. Guys, can you see my charts? Can you see my screen? Gary says that he can't hear it. I just want to make sure everybody can see it. Yeah. Gary, maybe a quick little reboot. I'm not sure why you can't, but everyone else seems to be okay with it. And I like that you said exited. So Christine, you actually went the wrong way on the second one. I got you. We'll do lessons today. Guys, this is what makes the classroom work. Christine said, hey, Mark, I'm not sure how to do this. And Christine, I promise you, we will learn how to do it before the day is over. But I'm going to go through rules first so we know what we're looking for. So simulate, practice, break all the rules in the beginning. We'll talk about them. And then simplify. Simplify, simplify, simplify. What are you going to commit to? Guys, you've got to know what they look like. That's where taking pictures pays huge dividends. The more pictures you take of things, the easier they become to recognize. And the more pictures you take, they actually become easy after a point. You're like, oh my gosh, look at all that momentum. Christine's been with us for a week and she's got momentum figured out. Now she's just trying to figure out what to do with it. And in the beginning, what to do with it is the high probability trend trade. All we're doing is we're learning how to recognize things, guys. So rule number 1 says that your large chart, the big chart, the slow chart, must have strong triggers. And I want to share these 2 pictures in here. So for those of you that are new, this is your roadmap to what you're looking for on charts. And it starts with trigger lines. Trigger lines are just moving averages. And I'm going to tell you right now, guys, you don't have to know how to build a clock to tell time, right? I can't tell you the math that goes into these. I can't tell you what period they are, what the mathematical manipulations are. But what I can tell you is that my dashed lines are the large triggers. They're the slow triggers. When they're red, they're going down. When they're green, they're going up. My small triggers, the solid lines, are a faster moving average. And when they're red, they're going down. And when they're green, they're going up. And that's pretty simple, right? And the trend is the exact same thing, guys. When the trend is red, when the background is red, your trend is down. You're only looking for rules to be met for high probability trend trade short. If the background is green, the trend is up. You're only looking for rules to be met for high probability trend trades long, because that's the direction that the large crowd is making it go. So we're going to use these trigger lines to define momentum. When the background is green, when the trend is up, both your large and small triggers have to be green as well. And that would be that conflict that Christine was talking about. Because if one is green and one is red, you can't have odds favorable momentum. If your background is red and you have a green trigger, you can't have the best of the best strong triggers, guys. So strong triggers relies on the colors matching. And then when your small triggers break above the large triggers, when that space is created between the two, guys, this is strong triggers. This is exactly what it looks like on any chart that you're looking at. Separation between the small and the large, guys, like scissors opening, ready to cut. When you have strong triggers, you have a market where the odds are favorable for the market to continue up. And that's why I say odds favorable momentum. I got ahead of myself. When you have it in a downtrend, the space between the small and the large, all the colors match, the odds are favorable for the market to continue down. You'll actually use that refinement chart to pinpoint Fibonacci resistance for shorts. You'll be able to pinpoint Fibonacci support for longs. On your large chart, on that slow moving train of a chart, it looks like a tail. You're going to be able to pinpoint using a smaller, faster chart exactly where these tails are most likely to form. And guys, strong trigger lines pushes that market. Strong trigger lines can break key areas, and God bless them, strong trigger lines will even cover some of the mistakes that I make, some of the mistakes that you may make, because momentum becomes difficult to stop. But it does, and it does slow down, guys. And when your small triggers work their way inside of the large triggers, when those scissors close, if you will, we call this a weakening of the large triggers. And when I have weak large triggers, anything can happen up or down. And you're going to hear me say this a million times during class, guys. I'm a huge fan of language in the learning process. Taking a visual, strong triggers, and associating it with the phrase odds favorable momentum. It makes you feel good about the potential long trades. Taking that weak trigger look and associating it with the words anything can happen, it reminds you that your advantages are gone, guys. And rule number one is designed to let things push in the direction. So strong triggers are pretty easy here. Here's strong triggers, separation. Here's strong triggers down. Here's strong triggers up. Just because we have momentum doesn't mean there was an entry. But strength and strength, it becomes pretty easy to recognize. And then weakness, and there's a bounce. And then you just come through over and over. And termination conditions are killing it today. And then we get those weak triggers, and they're right at a red line, and they're more likely to bounce right here. So, guys, strong triggers breaking areas, weak triggers into areas creates a problem. And that's kind of a segue to rule number two. But I want to ask everybody, are you good with strong triggers? It's not a difficult look. You can go back on your large chart and take 3 or 4 pictures and really cement the idea that separation is strength, and you'll go back and study it, and you will learn to trust it. But once you have momentum, it's so important that there's not something in the way. Momentum is awesome, right? But that big Mack truck going down the highway, if there's a mountain in the way, it's going to stop that Mack truck. So making sure that termination conditions are false. None of those likely to stop areas, guys. And when I don't have termination conditions, I'll have room to my profit targets. And we're going to call that a clear path. The advantage of a clear path. Momentum and a clear path, guys. This is the basis for so many trading plans. So the areas that we're going to look for in a large chart. I call them areas because they are. But we're just going to call them lines on a large chart, because when you name them individually, you try to rank them. Human nature says, man, this has to be more important than that. And this one's got to carry more weight than that one because it's thicker, because it's a prettier color, whatever. So the lines on a large chart that can create problems, the lines on a large chart where decisions are being made by the large crowd, guys. We're looking for divergence highs and lows, a magenta line from a pivot up top. This pivot with a pink line, magenta line off of it, lets me know that there was a loss of momentum. It's not a termination condition, it's just a loss of momentum, but we're going to use it. Divergence low is the same thing. When there's a loss of momentum at a low, you're going to see that blue line form. Fibonacci resistance and support, guys, these are the lines where the market may stop, may bounce, may reverse. There could be this fight between buyers and sellers. Decisions are made when the market is trending up into Fibonacci resistance, when it's trending down at support. We also have yellow 1-to-1s, which depending on which way the market is moving, if the market's moving up, yellow 1-to-1s behave as resistance. If the market's moving down, they'll behave as support, but they will always be yellow. And then finally, the mid-band, guys. The mid-band may behave as a termination condition, and there's a recipe for it. But the easiest way to become proficient, to give yourself the advantage, to remain safe, if you will, and not trading into areas that may stop the market, is first you let price reach it. So if the market is trending up and those price bars smack into Fibonacci resistance, when divergence forms in the middle, treat them as lines. Let's see what chart you're looking at, D. Where do you see divergence? Okay, so these are small swing 1-to-1s. What is this dashed line? D, something weird is going on. I'm not sure why you have what looks like divergence right here, because you don't even have pivots. Something's going on with your data right now. Something's not right there, or you're carrying divergences over potentially from a different time frame. So just do this for me. Go to your large chart, right click, and reload historical data. Yeah, divergence lines should never print just arbitrarily. There has to be an up and a down, and then that divergence comes in. So I'm not sure what's going on with your charts. Try and reload it and see if those go away. That's weird. I've never seen that. But I could see how that would be confusing. So guys, price reaches resistance. All you have to do is ask yourself, where are my triggers? And if they remain below, and I'm going to tell you guys, every time you hit an area of resistance, in the moment, it will be a termination condition. That is your cue to say no more long trades. This is an area that may stop the market. This is where decisions are being made. This is taking away my advantage of a clear path. Rule number 2 is not met. The market is trading down. It reaches Fibonacci support. It might be a divergence low. It could be 1-to-1s. Where are my triggers? Do that every time. Did price reach an area? Where are my triggers? Every time you're looking for a trade. And if they remain above support, well, then it's a termination condition. This is an area that may stop the market, guys. And it happens all day long. Termination conditions, price reaches Fibonacci resistance, the triggers haven't broken through. Look at the bounce right there. Price reaches the divergence low, the triggers don't make it through. Look at the bounce. Guys, you know about these areas. Fibonacci support, the triggers don't break. Look at the bounce. Over and over, guys, you know exactly where these areas are. And you have the most basic recipe to never get caught trading into them. Still there, D? You can try right-clicking and maybe reloading a template. Or maybe just shut it down and open back up. It's just weird. I've never seen that before. And I wish I had answers for you, but I'm the most not techie dude ever, unfortunately. So guys, can you give me a why in the room? We just got the basic recipe for knowing when. For knowing when we shouldn't trade into an area. And you can, once again, scroll back and develop trust, guys. No reason to go short. No reason to go long. We see it again right here, guys. And look at the reversals that are coming off of this key areas. If you don't think decisions are being made at these lines, you're fooling yourself. Look at that. 1 bar already starting to drop down. Some of you went long into it. Some of you are struggling right now with it. Some of you took the short and it didn't work out, guys. Let it be very black and white. If you reach a line, the triggers don't break, sit on your hands. When are they broken? When is the path clear? When the small and the large triggers get to the other side. When both your small triggers and your large triggers clear support, support is broken, it behaves as resistance. When both the small and the large triggers get to the other side of resistance, resistance behaves as support, the path is clear. So you brand new users, you don't have the burden of over-analysis. It's either a termination condition or it's a clear path and you're looking for all those rules to be met. Let it be that simple for your first couple weeks. And then this ability to recognize whether it's a termination or a clear path is going to bring you to what's going to ultimately be your second trade. And this is what we call the 50-50 trade. It's not a trade that has a 50-50 chance of winning. 50-50 is nothing more than a reference to the trigger lines. So when 50% of my trigger lines smash through the area, the small triggers, that fast-moving average, just decimates support. And the large triggers are lagging behind, guys. 50% below, 50% above. It's straddled, it's split, whatever you want to call it. This level of momentum, this huge separation between the smalls and the large, is what gives me the potential for this area to break. And it's only potential. The path isn't clear. So this is going to be your first medium probability trade when there may be a problem. And that problem is that you don't have a clear path. So if you don't have a clear path, guys, you're going to teach yourself to rely on momentum. I'm going to give you a plan that makes sure that you never sacrifice it. And what you'll find is that there's a lot of opportunity on these 50-50 trades, but there's a very specific way to take them. And I will give you that very specific way. So again, if we go back to the large chart, back to the live market, I want you to see this. Absolutely no triggers through, no reason to go short. This one had the potential to break, but didn't. This one had the potential to break, but didn't. And this one got stopped cold. And now we're back into one-to-ones and support, and all the triggers are above, guys. 50% of your day sitting on your hands, waiting to see what happens. 90% of your day. Does that look like a range to anybody? Does this look like a giant fight between two areas that maybe you don't want to be a part of? Rule number 2 will do this for you guys. And then the cool thing is when we talk about advantages, and that's all we do is we talk about advantages, and we know where these lines are. We know where these decisions are being made. When price reaches resistance and all the triggers remain below, that's a termination, and your rules tell you no more long trades. But here's the cool thing, is if none of the triggers break through and those large triggers go from green to red, there was a decision so impactful at this key area. There was a decision so strong to go the other direction that it reverses the market. And the trades that you find where the rules are met after a strong top or after a no triggers through termination that reverses the market from a low, a strong bottom, guys, this is where the highest probability trend trades happen. This is where those 50-50 trades have the highest chance of success, is that area right after a strong top or bottom. So you're going to be able to incorporate just this look, your understanding of termination conditions. Knowing that the trigger lines have to roll, guys, it's going to create one more advantage for you. So is everybody good? I'm going to ask one more time. It's got to be more than Richard that understands what's going on here today. If price reaches a line, sit on your hands. If you haven't reached a line, guys, look for opportunity. The easiest trades that you will ever take happen in between fibs, not at fibs. The easiest trades you will ever take are going to happen with a clear path, not hoping that an area breaks. And once you understand momentum, guys, and once you get that clear path, and once your rules are met, you're going to turn and look for an entry on your smaller, faster chart. You're done with the large chart. The rules are met. You're good. It's time to look for an entry. But there's one termination condition. One time when rule number 2 isn't met on a small chart, guys, and that's 3 divergences in the same price range. 3 magenta lines from a high, 3 cyan lines from a low. Unless you have D's software, then they're just arbitrarily everywhere. Did that clear up, D? Were you able to make those go away? Okay, on with tech. Cool. Guys, three divergences, three losses of momentum in the same price range may terminate the trend. There's a lot of ambiguity. It's funny when you teach something, and everybody's so used to everything being 100%, right? I use words like it may terminate the trend. It's likely. It has the potential, guys. There's no guarantees in day trading. There never has been, which is why we trade patterns that have been proven to win more than they lose, which is why we trade that statistical advantage. So three divergences in the same price range from a low or a high, it may terminate the trend. My advantage of a clear path is gone. And it becomes more powerful with those anything can happen triggers, those weak triggers that we learned about from rule number 1. And it becomes even more powerful if the final pivot is higher than the previous or lower than the previous. And guys, it creates a head and shoulders. So if my rules are met on the large chart, if I've got odds favorable momentum, if my path is 100% clear, and I turn over to my small chart to look for that entry, and there's those three darn divergences, because the smaller, faster chart will show you the change that you can't see on the large chart, then I have to pump the brakes and say, wait a minute, this might terminate the trend. Let me not go for that next short trade. Let me not take that next long trade because things are going sideways on me. And then I show this picture one more time. 90% of your day. 90% of your day. That's a long time, guys. That's a big percentage. Is just spent reading charts. So focus on the chart reads first. Focus on the momentum. Focus on the clear path. And guys, this is rule number 2, keeping you out of a consolidating market. This is rule number 2, keeping you from blowing out accounts, hoping areas break. This is rule number 2, keeping you safe, guys. Your large chart is like your favorite grandma, and all she wants is what's best for you. And she's going to give you every lesson that she has, and she's going to try to keep you safe. And guys, that's what rules 1 and 2 do. Eventually it breaks out. You'll find opportunities. But the difference between the successful traders in my experience and the people that struggle, as soon as you convince yourself that the only way it's appropriate to enter the market is when your rules are met, what happens is you don't give away money that you shouldn't be giving away. And the ability to do nothing when there's no advantages present is what separates the rookies from the pros, the winners from the losers, more often than not, guys. So commit 100% to momentum in the beginning. Commit 100% to that clear path in the beginning. Give yourself the best chance of success. And when you have it, let's let the small crowd do their thing, guys. Let's let that fighting crowd fight. And we're going to be able to take advantage of them so expertly, so precisely, that we're going to use a limit order to buy or sell that pullback they create. And we're going to do it at areas inside of triggers, guys. So we're going to use a limit order. We're literally going to wait for the market to come to us. And we're going to have that limit order sitting in an area, a line on the small chart, fib, midband, or yellow 1-to-1. But here's the deal. We're going to let that area be inside of those triggers, those moving averages, because this is where the advantages happen, guys. And we're going to use that refinement chart. 1 bar on the large chart defines direction, momentum, and areas, guys. And when our rules are met on the large chart, the bottom of that bar is going to be the beginning of that fight, guys. And we're not jumping in at the bottom. We're letting the small crowd fight on this refinement chart, this small chart, this fast chart. And you guys will pinpoint at areas inside of triggers exactly where the market is most likely to continue. And this will become your entry. And when everything is screaming down here, you will develop the courage to sell a market while it's on its way up on a small chart, guys. And this is what's going to reduce risk. This is what's going to maximize your profit potential. And your great entries revolve around one simple concept. On both the large chart and the small chart, price returns to the large triggers. It's a regression of the mean. It's an average thing. Price returns to the large triggers. We're going to call this the correction point. On the large chart, my large triggers are the correction point. This is where I expect the price to come back to. On my small chart, the large triggers are the correction point. This is where I expect price to come back to. So I'm going to use this concept, and we're going to be able to create favorable large triggers. Favorable large triggers means that your large chart large triggers and your small chart large triggers are overlapping. So we put them both on the small chart. There's the synthetic triggers, these step triggers, nothing more than the large chart large triggers. And then there's the large triggers, the smooth ones. And these are the ones that you're going to use to gauge momentum, right? And when they're overlapping, like two snakes riding piggyback, guys, like if you put one hand on the desk and the other hand on top of it, when they overlap your correction point, your two correction points become one correction point. This is the smallest area you could possibly have to put areas inside of. The smallest range to put fibs, mid-bands, and yellow 1-to-1s to give the market something to bounce off of, to pinpoint exactly where the small crowd is likely to fail. And guys, this is how you're so precise with your entries using the high probability trend trade. So when the large chart says up, and the large chart says momentum, and the large chart has a clear path, and you are chomping at the bit, I've got to get paid, I'm so excited, I hope they don't go without me, you're actually going to wait for a reversal bar, guys. You're going to let the small crowd show up and do their thing. And man, it takes a little bit of patience. That's what Tech told you? Let me look at your chart again. Jason's brilliant. But how does that explain that one? So the pink ones are small swing 1-to-1s. 100% D. I want to take a picture of your picture. So these, come on. Those are small swing 1-to-1s. But that is a divergence high, and that is a divergence low. So how do I get those phantom divergence lines off? Sorry, this is me walking through what I'm about to send my brother. And we'll see what he says. Hey, JM, that's a perfect test, man. I got you loud and or clear. All right, guys, so let's get back to rules, and we'll get this for you, D. I promise. That's what we do. The reversal bar begins the pullback, guys. The reversal bar says, hey, guess what? The small crowd is fighting, and because the small crowd is fighting, let's look for an entry. Let's look for one of those areas inside a favorable large trigger. So when the reversal bar prints, this is not my entry for the high probability trend trade. This is actually on the wrong side of momentum. This would be the worst place to enter. We're going to identify favorable large triggers. That's your red box. Large and synthetic, one on top of the other, overlapping, creating that tiny little range there. And then we're going to create what's called a window of opportunity, guys. And I want you to embrace that phrase, the window of opportunity, the point where the market is most likely to continue. And it will extend from the highest point of support, fibs, mid-bands, or yellow 1-to-1s, it doesn't matter which one it is, to the lowest point of support, fibs, mid-bands, yellow 1-to-1s, it doesn't matter which one it is. But from this level of support to this level of support, guys, that box is where the market is most likely to continue. That box is the most likely spot for the small crowd to fail, and that box represents your best of the best entry for the high probability trend trade, so much so that you will activate a limit order right at the top of that window, a tick or two above support, and you'll just triple dog dare the small crowd to push down to get to you, and if they do, you're in the best trade ever. The trigger lines are the correction point. The trigger lines aren't the entry. The reversal bar starts the process. The reversal bar isn't the entry, guys. We're relying on something solid for the market to bounce off of. And these lines that aren't in the correction point, these lines on the wrong side of triggers, these are not a part of the equation. They're not in the window because this is past where we expect price to correct. This is beyond that point where we expect a bounce. And you'll actually find yourself with stops down there near that line. And then going short, someone said that the stocks had a rough day yesterday. Hell, I don't care. I'll just go short if the market's going down. But the process is the same for finding the best of the best entry, guys. First, I wait for the reversal bar. I wait for the fight to begin. And man, there's nothing worse than just jumping in and getting stopped out instantly on its way back to a mid-band inside of triggers. So when the reversal bar prints, I say, where are my triggers? Are they overlapping, one on top of the other? And if they are, I love it. It feels good. And then I look for lines inside. Fibs, mid-bands, yellow one-to-ones. Doesn't matter to me which one it is, but I will insist that they are inside of triggers. I'm going to write that every time I take a trade. And guys, there's one line, one point where we expect the bounce. My limit order goes 2 ticks below it, and I wait for the small crowd to do their thing. So the reversal bar is not my entry. It signals the beginning of the pullback. Hitting the triggers isn't my entry. Guys, it's the lines inside of triggers. It's like throwing a tennis ball, and now I have some place to bounce off of, right? Equal opposite reaction, you physics nerds. And guys, this is the best of the best. And these lines on the wrong side, are not in the window because they're beyond the correction point. Watching the ES go down yesterday was a win-loss because on one end you got your trades on the same time your IRA is mainly S&P 500. That's okay. You're hedging your bets now being a future trader, Morgan. You're hedging your bets now. So guys, once you understand where the market is likely to continue, if you give me 20 days of focusing on momentum, if you give me 20 days of focusing on a clear path, if you give me 20 days of not doing anything more than studying how to find the point where the market is most likely to continue, that sets you up for your management, guys, because you're going to put your first protective stop where the market shouldn't go, generally 4 or 5 ticks beyond that correction point, beyond those trigger lines. And the cool thing is it doesn't take you very long to understand that anything that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30% of the time. You'll discover that small losses are a normal part of a positive equity curve. You'll be comfortable with the idea that once this stop is in place, guys, you're going to force them to come get you where the market shouldn't go, rather than just giving up the money where it's likely to bounce, guys. And these great stops help minimize risks. Paul, will you use that screencast link for me? I can't see what you have going on there. And the cool thing is with all these advantages, once you get a reversal bar in the direction of the trade, guys, 2 ticks above it if it's a short, 2 ticks below it, minimize the hell out of that risk. You've already minimized risk with odds favorable momentum. You've already minimized risk with a clear path. You've minimized risk by getting in at the areas inside. And if you get that reversal bar, guys, it's not uncommon to see one of these trades fail and you guys not give up $300-400, rather giving up $40 or $50 a contract. Not a whole lot, guys. And then when the runners run and all you're taking is these tiny little hickeys, guys, that's how you're going to make your money. But you've got to study it and you've got to trust it. And I'm going to teach you how to study it right now. When the large chart has momentum, when the large chart has a clear path, circle the tails that you see on a large chart. Scroll back historically and circle a tail. And if that tail lines up with a support inside of favorable large triggers, take a picture of it. Annotate it with momentum, with a clear path, with a pullback to an area inside of favorable large triggers, guys, and go drop it in your spreadsheet. Go put it in your favorite looks. This is the look that you're looking for. And there's like 380 pictures from the spreadsheet. Here's 2. Here's a long trade. Strong triggers. Does everybody see how it didn't reach that magenta line yet? That path is clear. Here's one of the cool things about what we do that I want to share with you guys. I'm going to use this picture to do it. And I'm going to talk about a couple of the things that new users find themselves a little concerned with. Guys, that doesn't seem like a lot of room to make money, does it? Has anyone else thought this? Oh, I'm almost there. There's just not room to make money. Has anyone stayed out of a trade because you're like, there's just nothing to make there. I'm too close. This is where buying pullbacks pays huge dividends, because this tiny little run turns into this monster run when you wait for the pullback, guys. You are literally increasing your profitability by waiting for the pullback. And if you don't jump in early, if you wait for the areas, you've decreased your risk dramatically. One divergence doesn't scare me, guys, because large chart has odds favorable. Small triggers turning against me doesn't scare me, because I have odds favorable, because I'm allowing the large chart to define momentum. And these are little things that you're going to have to work through, and you're going to put it together. And the more you study it, the more likely you are to never miss it. The more pictures you take, the easier it becomes. It's almost like it slows down the market. Guys, odds favorable, nothing in the way, directly to resistance inside of favorable large triggers. This pattern repeats itself every day. I don't care if you're trading crude oil. I don't care if you're trading the S&P. It doesn't matter if you're trading gold. This says perfect trend trade short. What does it look like? It looks like odds favorable. Oh, this is one of my trades. Odds favorable, clear path, pull back to resistance inside of triggers. I remember taking this trade. This was a one and done. That was my whole day right there. 4 contracts from fib to fib. The easy money, the easiest money you'll ever make. Trading from areas, trading to areas. Don't reverse that. And guys, that's the high probability trend trade. This is what we do every day. This is what I talk about every day, guys. 3 rules. There's an easy way and a rough way to get there. Take a lot of pictures. Post a lot of pictures. You've got to learn the looks so that it becomes easy. The fastest way to learn the looks so it becomes easy is to take pictures, guys. I mean, fire up that camera every day. You should be taking, I kid you not, if you're in front of the market for 6 hours, you should have no less than 30 pictures a day. I firmly believe that. But in order to get good at this chart reading, to be able to find this high probability trade, to get comfortable with these advantages, go take 25 pictures each, guys, of strong triggers and weak triggers, of a clear path and terminations, the 50-50, the entries. And what happens is you're creating recognition through repetition, guys. You're taking these looks every day. You're snapping pictures of strong triggers. And I promise you, if you go to this 101 tab and you fill out these strong triggers, you're not going to miss strong triggers. You're going to know exactly what it looks like. You're not going to hesitate. The same is true with a clear path, and the same is true with your entries, guys. You're committing these looks to memory so that you trust them, so that you can catch them, so that you can find them. There's some study that goes into this. And if you can identify strong triggers, you should be able to identify weak triggers. And if you can identify weak triggers and strong triggers, well, then you've got to get the clear path and the terminations. And what's kind of cool is yesterday, I think we did this. One picture, right? We took this picture of the market, and we identified strong triggers, and we annotated it. Smalls above large, all green, space between, odds favorable, minimum, strong triggers, rule number 1 met. How could you ever miss that if you're this thorough annotating every picture that you do? And then we took the same picture, and I believe that we took a weak triggers picture with it. There it is, the exact same picture. We just changed the annotation, weak triggers, making sure that we can recognize it. If I'm not mistaken, we also turned it into a termination condition. The exact same picture, annotating exactly why. Guys, this was 3 different lessons in one picture. We didn't have to take one trade to do it. Embrace the idea that recognition comes through repetition, that the work you put into taking pictures and annotating charts talking about the whys and what it means to you is going to get you exactly where you want to be, and it's going to get you there a lot faster. I'm also going to give you the high probability trend trade checklist. This is the exact same thing 4 times over on the first page. Print it out. This is how you're going to be able to police yourself a little bit. You're always going to be asking yourself, every time you look at your chart, guys, if I bring up my chart, this is exactly how I do it. I say, hey, do I have odds favorable momentum? Hell yeah, I do. Do I have no termination conditions? Well, price didn't reach an area and I cleared the previous. Holy smokes, I need to open up a smaller, faster chart because my rules are met for an entry. If I get a reversal bar, I have one line at those triggers. And that line represents the point where the market is most likely to continue if I get a pullback. How quickly did that happen? Because I'm talking to myself every time. Every time I take a trade, that's exactly how I'm talking to myself. These are the same rules that I'm going to write on my chart every time I take a trade. So when I take the trade, I go through it, I ask myself, sorry. I'm asking myself, did I reach an area? Do I have momentum? Is this what I'm looking for? And guys, if you go through that process every time, if you learn to begin to speak to yourself in terms of advantages, what happens is you start looking for advantages rather than trades. And then as you're taking those pictures and learning, here's the exact same checklist that goes through and talks about what is a strong top or bottom. There's even a video, great video. It's a no triggers through termination that reverses market. Strong triggers, weak triggers, right? Know both sides of the coin. Termination, potential to break, broken, entries. That's it. Let it be that easy. Sorry guys, no, that was me. I'm typing back and forth. Can you hear me now, guys? Give me a Y if you can hear me. Okay, cool. Wanted to make sure. Sorry, I'm going back and forth with Jason. I'm multitasking. That's my bad. But guys, this high probability trend trade checklist is going to set you up to know exactly what you're looking for. This 101, how to read your indicators, is going to set you up to know exactly what you're looking for. And these are designed to get you to the KISS plane, guys. These are going to get you the stepping stone in your learning journey, the best of the best, the highest probability trend trade, guys. This is the one that teaches you to read your indicators. This is the plan that I've had people follow to the letter and do over 80% winners. This is the plan that I've had people get funded in those prop firms in their first 30 days, following it to the letters. Eliminating opinions, keeping it mechanical, guys. And this is the most basic form. And I wish I had a nickel. I wish I had a nickel for every message that I had sent to me. Holy shnikes, Mark. It's so easy if I just follow the rules. And I know it seems weird, right? But this is designed to optimize your chances of success, guys. And then through simulation, study, class feedback, continuous practice, you're going to create a plan that's based on your ability to read the indicators. You're going to base a plan that allows you to catch more trades, that allows you to see more patterns, that allows you to manage more aggressively. But you've got to do the work, and it's got to be easy first, guys. So your simple plan for consistency, never fight the large chart. Your simple plan for consistency. Don't fight the triggers. Don't fight the termination conditions. Go with the flow and define your entry, because your entry creates a manageable trade. Your entry gives you the ability to have the least amount of risk, the highest amount of profit potential. And then you've got to manage it. And then once you get in, guys, you've got to do something with that great entry. And great entries create manageable trades. I say that every day, and I believe. Sorry, hold on. All right, so hold on. D. We're gonna do something to fix your charts there. I'm sorry, guys. I totally lost my flow because I'm trying so hard. I like to fix things if I can. So real quick, D, this is what I need you to do. Reload historical data, Paul, or just F5. All right, D, here's your instructions. Go repair your database. You will need to disconnect and reboot for it, but that should get you all taken care of. Awesome. So guys, you gotta manage. Once you're in, you gotta do something with those entries, right? You gotta figure out how am I gonna get paid. So your management plan, it's gonna be as mechanical as your entry plan initially. Your management plan should take the emotion out. The same way insisting on rules being met can do that. Your management plan will remove the fear, will remove the opinion, guys. And your management plan is 100% designed on your ability to get in where the market is most likely to continue. So you can't put the horse or the cart before the horse, guys. You've got to work on entries for a little bit. You've got to understand these entries. You've got to be able to get into the right spot. And then once you do, you've just got to commit. You're on simulator, guys. You can't ruin your lifestyle on simulator. You've got to commit to your stop going where the market shouldn't go, guys. Typically 4 to 5 ticks beyond the triggers, beyond that window of opportunity. And just sit on your hands and just wait. There's nothing to do. It's either going to stop you out or it's going to give you that reversal bar with all those advantages in place, guys. And that reversal bar is your first signal to reduce risk. Once the reversal bar prints, get 2 ticks above it for a short, get 2 ticks below it for a long, and then once again, sit on your hands. Just take all the stress out of it. You're on simulator. I'm going to say that 100 times today. You're either going to get your first target or you're going to take a tiny little loss, guys. And tiny little losses stop hurting once you begin to trust the methodology. And with all those advantages in place, you're more likely going to hit your target than not, guys. You're more than likely going to hit that $100 rather than get stopped out. That's just because it's a pattern that is proven that you're more likely to hit that target than get stopped out. And then that's $100 in your pocket, guys. That's $100 worth of confidence. That's $100 to dry up your sweaty palms. That's $100 to relocate the butterflies out of your stomach, guys. And it feels good. And you're going to move your stop to break even. And you're going to say, you know what, I just got paid. And I've got absolutely nothing to lose. I'm going to muster up the courage to hold for that second target. And I'm either going to get stopped out, break even, who cares, I just made $100, or it's going to hit that second target, guys. And if it hits the second target, you're going to exit. That's it, no more. You're out of that trade no matter what happens next. But the cool thing is you're out of that trade with $300. 2 contracts, 1 trade, $300, guys. Nothing but mechanics. No opinion, no emotion, no fear. And this is what you're learning for your first 30 days with Nexgen, guys. How to get in and how to get paid. Because the KISS plan is designed to optimize your chances of success, guys. And the more you learn, the more you'll alter this plan. And then once you're good with the high probability, it's going to open the door for that 50-50, guys. That 50-50 trade where it's not perfect. That 50-50 trade where you're giving up the advantage of a clear path. And let me see. Let me pull this up. It's one of my favorite toys in the room. Oh, go back. So this is the 3 rules, right? I always encourage people, Print this out and put it on your desk and make 3 little sheets of paper that you can cover the advantages with if they're not present, so that you're always talking about advantages. Your 50-50 trade, guys, it doesn't have a clear path because it's nothing more than the potential to break, which means that you can focus on the momentum. You can focus on the entry area. And this KISS plan, check it out. It should come from a strong top or bottom. That's your first yes. You should have odds favorable momentum on both chart. That's your second and third yes. And then no divergence on the 5-1, because does everybody remember what is divergence? It's a loss of momentum. And if it's a loss of momentum and I don't have a clear path, watch this. Why on earth am I still thinking about taking that trade? Why am I saying to myself, man, I'll give up 2/3 of my advantages and hope things work out? Does it happen? Morgan, you're using it as well. Jeffrey, you're using it. It really does. And all it's doing is it's training you to think in terms of advantages. It's forcing you to recognize them or their absence. And just because one's gone, it doesn't mean that there's not a trade. It means that you know what you have to focus on to get the most out of the potential, guys. So this tells you divergence, no trade. It reminds you divergence, no trade. And even in management, it says divergence, no trade. What do you guys suppose kills a 50-50 trade, a potential to break trade, more than anything else in the world? Divergence. I took this picture earlier. I was like 50-50 with divergence, and then I didn't know how to do the sarcasm emoji. And I was like, weird that the one thing that I say every day kills the 50-50 happened again, like it does more than it does not. And what's cool is you start to believe this, and you stop taking losers, and you stop giving money away. Paul, do me a favor, brother. Please use the screencast instead of just copy pasting. I can't get it. I can't bring those up, and I don't know why. So guys, this is your KISS plan. This is the best of the best. This is your roadmap. This is becoming a chart reader. So once again, I'm going to give you guys the full everything. Steal these if you didn't steal them yesterday. Here's the KISS plan. Here's my spreadsheet. Here's the PowerPoint I teach from. Here's the 101 chart reading. Here's the high probability trend trade checklist. When I told you that I would give you everything that you need to be successful, guys, I meant it. You now have it. You have the greatest software in the world. You have a plan on how to use it. You have a plan on how to study it. You have a spreadsheet that shows you almost 400 examples of it being used successfully. And guys, now you're just going to start working on building your trading plan. And one of the things that you have to think about are your daily goals. What's your daily goal? And people always underestimate how powerful $100 is. And if you make $100 a day, that's it for the 252 trading days. That's 25 grand. And nobody's ever been mad about an extra 25 grand. Most of us in our professional life work for bonuses, right? And we were pretty stoked when it was 5 or 6 in some cases. And 25, extra 25 a year, that's great. And you start getting good at it, right? And you double that. And then you really start getting comfortable and you find yourself in 6 figures. And guys, it's endless. And $100 a day on one contract is beautiful. If you do it on 2 contracts, the same $100 is $50,000 a year. So know what your daily goal is. Commit to it. Understand your rules. Commit to them. And then one more thing before I take a break, and then we'll get to all the chart reading after. I want to give you guys this because I think this is probably one of the most important things. And one of the most ignored things for whatever reason. There's 2 things you need to know before you sit down, before you go live, I'll say, because if you're a brand new user, you're not going to know these things like the back of your hand. You can't be expected to. You need to know why you will enter a trade. So until you have your own plan, I've given you a pretty solid one. And you have to know why you'll exit a trade. And until you have your own plan, I've given you the KISS plan, a pretty solid one. All you're doing is finding entries. All you're doing is committing to rules, guys, because it's the process that yields results. It is the understanding that yields results. It is the execution of the method that yields results. The market doesn't care about you. It doesn't care about your rent. It doesn't care about your mortgage. It doesn't care about your car payment. But things that we can control are whether or not we have those advantages. And then you got to know what kind of trade you're in so you know how to manage it. And you've got to know what kind of trade you're in so you know how to manage it. And you have to know what kind of trade you're in so you know how to manage it. Because every kind of trade is going to have a different level of management. Some will be aggressive, some will be a little more lax, some will use areas, some will wait on divergences, guys. So take the time to keep it simple. Don't give yourself too much to think about in the beginning. And you'll be amazed at how easy trading can be. You'll be amazed at how stress-free trading can be. So, on that note, Morgan, I got my Ninja Trader crashed today too, apparently. I'm going to reload my Ninja Trader, and I'm going to go take 5 minutes, guys. I'm going to stretch my legs, breathe through my eyelids, whatever I need to do. And when I come back, we're going to go back to everything that you guys have posted in the room. So when I come back, we're going to go to every link that's been posted. And I'm going to go back to those links, and I'm going to talk about momentum, and I'm going to talk about a clear path, and I'm going to talk about your entries, and I'm going to talk about your exits, guys. And I'm not going to trade shame you, and I'm not going to say, oh, you're so stupid, I can't believe you've been doing this for a week and you don't know this. What we're going to do is we're going to see how you did embracing advantages, and we're going to see if there's a way to do it better. And that's all it is. It's a private session where we see if there's a way to do it better, guys. That's one of the things that makes this education work so well, is the feedback, is me seeing what you're thinking, what you're feeling, what you're hoping, what you're wishing, and you telling me, Mark, this is how I'm reading my charts, so that we can make sure that there's nothing wrong with it. Hey, good morning, Miss Cindy. Feedback, guys, is what does it. Feedback is what sets apart the I hope I get good at this from the hey, I'm getting good at this people. I promise you that. And then Cindy and Adriana, before I go, I took a picture for you guys because I know you get excited about those white bar trades, and I know you're both working on them. Where did it go? When you guys are looking for those white bar trades, when you're trying to be the first one in the market off of a high or a low termination, one of the most important lessons that I learned the hard way, don't fight strong triggers. So even there was a white bar here. If you're fighting strong triggers, they're less likely to work. And look at the difference. Where did it go? Look at the difference in the reaction when the triggers are weak going in. Just a little advantage for you guys. I wanted to share that. I was thinking about you guys when I was watching it. Strong triggers in, it's typically going to correct and come back. Weak triggers in, you have a way better shot at getting to where you want to be. And notice that this one wasn't a termination condition, but this one was, and that's what rolls it. It's kind of cool. And these are the little patterns as you guys start working on that one that'll pay dividends. And one of the things on my own personal plan is it says in big bold letters, don't fight strong triggers. So that's it. All right, guys, I'll be back in 5 minutes. When I come back, we will start looking at charts. See you guys in just a minute. All right, so Christine, this is going to be your moment. And guys, this is for all you guys that are new to NinjaTrader. Let's talk about entries and exits. Let's talk about maybe going to grins higher. Maybe. So guys, NinjaTrader, there's a couple different options here. So for you guys that are just jumping in, that's your buy market. And what buy market does is it just throws you into the market. That's it. Whatever price the market's at is exactly what you're getting in at. The same is true if you hit sell market. It just puts you in all willy-nilly. So that's your buy market, sell market. Not what we use for the high probability trend trade, guys. If we're doing a high probability trend trade, if we're waiting for a pullback, if I right click above the current price, it's going to give me a sell limit. So if I'm looking to go short, that sell limit says if price reaches this order, it's going to put me in a short position with the intention of going down. Of course, that's crazy when everything's going up, right? And then the flip side is if I right click below price, buy limit to. This says if price pulls back to this mid band, I want to go up. I want everything to go up. And guys, that's how we buy or sell those pullbacks, is with the limit orders. And then one of the most important things you can do, guys, is always protect yourself. And that's where the ATM strategy comes in. So if I have none in my drop down and I jump in, I don't have stops to protect me. I don't have targets to reach. And I'm relying on a close button to get me out of a trade. But the cool thing is there's all these options that are already loaded in from Nexgen for you. There is a one lot. Lot means contracts. So this is one contract. If you're trading the KISS plan, you're trading a 2 lot. Your initial stops, guys, some of them are 12. The 24 stops are designed for the NASDAQ. Please, new users, you probably don't need those. But what this says is in a one contract scenario, my stop is going to be 12 ticks. And guys, 12 ticks is not the correct stop. 12 ticks gives you reaction time. It gives you reaction time to put the stop where the market shouldn't go. And then it says I have a target at 20 ticks, a $200 target. Or if it's a 2 lot, I have a target at 20 and 30. And what happens is if you activate one of these ATM strategies, if I jump in the market, I've got my stop in place and I've got both of my targets. So your stops and targets can be moved. If I right click on this red line, I can move my stop anywhere, but the original stays active until I click a second time. The same is true with targets. I can click it and put it anywhere, but it stays active until I click a second time. And if my first target is reached, one contract is pulled off, and you'll notice that I still have one target in the distance. And then if my second target is reached before my stop is hit, it'll exit me from the trade, and I'm what we call flat. Christine, did that clear up any questions that you had on entering? And guys, I'm going to tell you right now, I have never in my life used buy ask, buy bid, sell bid. And I definitely don't reverse because I'm following rules. If I have to hit reverse, then I made a mistake somewhere in there. I'll just simply hit close. So good stuff. And practice it, guys. Practice entering, practice exiting, practice everything. But Christine, if you're taking pullbacks, then you need to practice the limit orders. Because if this market is moving fast, it's hard to time it. It's so much easier to just wait for it to come to you. But if you're jumping in, buy market, sell market. All right, guys, I'm going to scroll up to the top and we're going to start looking at pictures. And we're going to see what's going on in the wonderful world of day trading today. So Joel gets us going. He actually got us going last night, but I figured I would go ahead and start with this one. And Joel says, odds favorable momentum in a clear path. And I love this picture because there's something that's going on here, guys. Joel says, my small triggers and my large triggers are above resistance, so the path is clear. But price reached resistance, and the smalls are through, but the large are not. So this is actually one of those 50-50 rules. And guys, your clear path is solid until you hit the next line. Your clear path is awesome until you hit the next line. So if you've got a couple fibs stacked in there, guys, you'll go from clear path on this one to 50-50 on this one. And that's just how it works. He takes the perfect entry, gets paid, couple divergences print, gets out. Beautiful trade, Joel. Really nice. And then the next one, trading directly into a termination condition, takes the trade anyway and manages to get out without too much harm done. But why bother? You know where the line is. You know that it can stop the market. Guys, this is just trading hope. This is sure hope. I prefer having an advantage. All right, so Cheetah, can I get in either one of the white circled areas for the pullback? And I answered this in the room as well, and I'm going to tell you, Cheetah, the beautiful thing about you trading is that it's your plan. You can do whatever you want. And Joel, that's kind of how I feel about it. Why bother, right? Why bother? Why bother trading into areas? Why take that advantage away when you know that it loses more than it wins? Why even let that be a part of it? So Cheetah, this is pretty cool because when you went to circle these, well, you didn't write any of your rules. You wrote one rule on there, right? Is it a clear path, Cheetah? So if it's not a clear path, it's not a high probability trend trade. So that answers that question. But let's talk about it. Let's pretend that it was a clear path. And this is where language is important, guys. This is where language pays huge dividends. So Cheetah, if I do a box from the top of my trigger lines to the bottom of my trigger lines, this is where writing the rules on the chart is going to help me out. My rules say buy a pullback. No gap theory. That's a large chart thing. Buy a pullback at an area inside of triggers. Are you comfortable with rule number 3? The gap theory, Cheetah, is a large chart. Large chart scenario, never a small chart scenario. So if I go and I draw a line, let's change the color of it. Hold on, let me go to shape. Here's my trigger lines from the bottom to the top. So already my 1-to-1s are beyond the correction point. Not just Cheetah. Does that make sense to everybody? Those 1-to-1s are below the triggers. So they're not a part of my window of opportunity. So check this out. If I tighten it up, so Cheetah, does okay mean yes, I understand? Or does it mean stop calling on me, you're making me uncomfortable and I don't understand this? Cool. So if I tighten up this box from the lowest point of support to the highest point of support, there's my window. Like per the rules, 100% per the rules. That shaded area represents the highest point of support to the lowest point of support inside of triggers. And Cheetah, what I suspect is that when you took this picture, these 1-to-1s were probably, you're like, oh, they're in there, right? Because the market's moving. And these were a part of the window until they weren't. So when you were like, oh, let me grab that picture, they were probably very much inside of those triggers. And then it just changed as the market went up, which is kind of cool because your window of opportunity started this big and then it started to shrink as things came together, which for me is always a bonus. So I think you nailed it on the mid band. Technically, that fib is also in the window. Does that make sense? Did that help a little? And guys, this is why I think writing rules on your chart is always such a big thing. You absolutely had odds favorable momentum, but it's coming from a weak bottom and you don't have a clear path. So you've got to think about it a little differently. You're not thinking about it like a high probability trend trade anymore. You're thinking about it as a trade that only has the potential to break the area, which gets that management hat on just a little more snug, and gets you prepared to look for something that goes wrong, whether it's divergence or a second lower divergence or something that would affect your rules. So it's a great picture. And I really do think that was very much in the window when you went to go take the picture. And then it's a neat little progression how it works its way out of the window eventually. And that's why we don't just set it and forget it, guys. It's not the Ronco theory. We're always actively watching our charts and engaging these things. So Jen has a termination that creates a reversal that gives odds favorable momentum and a clear path. And she says, you know what, Mark, with this level of momentum, that's pretty easy money. Practicing these trades, getting your entries refined. Absolutely beautiful, Jen. Momentum and a clear path, guys. And I say it every day, and I mean it when I say it, is that when you have momentum in a clear path, it's hard to stop the market sometimes. It's a basis for so many trading plans outside of the high probability trend trade. You're welcome, Cheetah. Thank you for posting that. Guys, if you ever wonder anything in the world, just drop it in the room. We'll talk about it. Because one of the things that I found, and Cheetah, I'm not using this on you, just in general, one of the things that I find is people get a little nervous to post in the room, and I think that's totally normal and natural. But if there's a misunderstanding of a rule, and I've had people do that before. Well, Mark, I had a clear path. And I'm like, well, no, this is very much 50-50. Or Mark, I had strong triggers. Well, no, you actually had weak triggers. People begin to develop their own truths based on their own understandings, guys. And that's why the feedback becomes so important, because what it does is if there is a misconception somewhere, if there is a misunderstanding somewhere, then we can correct it before it becomes habit. And that's why posting in the room is so important. Paul, this is beautiful. Strong bottom. And dude, way to take the lesson from yesterday. Just a termination, not a PSO. That's awesome. I saw that this morning and I smiled really big. And then it reverses the market. And then it creates odds favorable momentum. And the path is absolutely clear. And you take the perfect entry and you get paid, and then it gets you break even. Beautiful. Guys, that's an awesome trade. Look at the entry. Christine, this is why we use limit orders. Because with that market coming down, Paul knew exactly where he wanted to get in, and he forced the market to come to him. Rock star, Paul. We're just going to celebrate victories all day today, guys. That's going to be my goal. Everybody gets a gold star today. No participation trophies, but we're going to find the good in everything that you guys print or post. All right, Red Rob. Oh, he was just looking for that help, and he got it fixed up. And then Jen. Good bottom, triggers roll, odds favorable. Oh, excuse me. Allergies are real today. And this is another one of those things. And Christine, this is almost exactly what you did. So take notes on this one. With all of that momentum, she lets price get to the other side of the mid-band on her large chart. She lets it clear the area, and then she's just, boom, let me jump in with all this momentum, and she's not holding for home runs. Just, Jen, you got it perfect. Coming and going. You made money from here to here. You made money from here to here. Guys, the easiest money that you will ever make isn't trading into areas, but rather trading from areas and trading to areas. Great job, Jen. Jeffrey Dean. I don't know why I feel compelled to say your name like that, but I do. Jeffrey. Let's see. Did you annotate? Saw your reversal and set your limit. What does that mean? Saw your reversal and set your limit. Is that what got you in, Jeffrey Dean? Saw your reversal and set your limit? No, there's no termination here. Not at all. None whatsoever. That's the middle of freaking nowhere. So let's go to your actual trade. And Jeffrey, we're going to do this every day, and eventually you're going to believe me, I promise. Eventually you're going to believe me. So let's talk about our first advantage. Did you have momentum? What do you think, man? Small's above the large are wide, space between the two. I agree. Yes, indeed. So if you thought you did, here's what you need to start doing. Is right momentum, and then what creates momentum in an uptrend? Small above large, space between. So what we've done, Jeffrey, is we've not only said, I think I had momentum, but we have defined what creates momentum and insisted on the look. And if you do this on every trade that you do, you're never going to think you had momentum. You're going to know, and you're going to say, let's go to a court of law, Mark. I will prove my momentum beyond a shadow of a doubt. Does that make sense? Guys, this is how you get to where you want to be. Great annotation. You won't make mistakes. And just for grins, Jeffrey, is the market going up or down based on that background? Perfect. So now you have momentum. You know which way it's going, and this is where you got in. So now you have to ask yourself, I'm going to say clear path, but here's how you have to think about it. Did price reach a line? It didn't, did it? When you got in, you cleared the lines. So you have a clear path. So you are 100% rocking momentum in a clear path. Are you with me so far? Are there any doubts in your mind that that's what's going on? No, hell no. You defined it. You pointed it out. You see it. And then, Jeffrey, what you did, and let me go through the whole thing. With odds favorable momentum, both charts, with no lines in the way, I'll JT FI. Is that fair? With nothing in the way, I'm just going to jump the fudge in. So Jeffrey, here's the challenge. Why are you so stinking greedy that you believe that one-to-ones, that a fib, that another fib don't have the potential to kill your momentum? So your next thought, get paid at lines. And this is 2 contracts for 12 ticks each, and that's $240 in a matter of seconds, Jeffrey. Instead of hoping that 3 areas break, instead of hoping that that momentum carries you the distance. And this is the second part of it. Get paid at lines on this trade. If you're just going to jump in, dude, those aren't home runs. That's not being cautious. That's being reckless. Being cautious, Jeffrey, would having your target 10 ticks below a line. Being reckless is having your target 42 ticks above a line, or 32 ticks above a line. Does that make sense? All you're doing is jumping in, and you're hoping shit doesn't stop. Lines stop things, right? Lines can create bounces. Lines can cause reversals. So just knowing what kind of trade you're in pays huge dividends. And Jeffrey, this is awesome because you waited for momentum, because you had a clear path. And dude, yesterday you were trading into areas, so now we're just going to trade to areas. Nicely done, man. Really nice job on this. Did it go all the way to 77.11? Just curious. And then the other thing that I might say, Jeffrey, is when you hit lines, don't keep risk on the trade. If these can create bounces, don't turn winners into losers. I mean, you can if you want. I'm not giving trading advice. It is fiscally irresponsible to allow your winners to transform into losers when you smack into a giant line that tells you that this is where the market could reverse. Nicely done, dude. Really nicely done. Do you feel the progress, though? Do you feel how today it's a little easier than it was yesterday? Good. Every day it gets better, Jeffrey, and you're stuck with me. So, and here's a good example of it. Price clears the trouble. You have odds favorable momentum. JTFI, get paid at a line. Nobody in this room does it better than Ron C. Eliminates hope 100%. 11 ticks. Let me make $100 and cover my commissions. And Jeffrey, this is the exact same style trade that you took, and that is a $660 trade in a matter of seconds, using momentum and a clear path. It's pretty outstanding. I used to hate this trade because it didn't wait for the pullback, and then what I realized is that Ron was listening, which is weird for me, right? Having been married as long as I have been. And Ron said, you know what I'm going to do, Mark, is I'm going to study every day, and I'm going to fill out a spreadsheet, and I'm going to recognize patterns, and I'm going to find a way to beat the market every freaking day. It's fun for me. It's so much fun for me to watch you guys start getting good at this, to watch you guys doing things that you never thought you could do. It's so much fun. And then Morgan says, you know what? I can be taught. When everything is down, when momentum is strong, I'm going to JTFI and get paid at a line. Morgan, perfect. And then Ron says, you guys think you can do what I do? Let me fight everything and still get paid. But 3 divergences on the small chart, pivot stop out, right at a fib, right at a termination. Ron says, man, I can probably get hooked up on a little cash there. Guys, this is aggressive. Not a trend trade in all caps, but beautiful. This is the one that gives me heartburn every day, but Ron does it amazing. All right, Jeffrey, let's see what we have. Jeffrey says that we've reached the termination conditions, right? And Jeffrey, you're using a lot of magic 8-ball vocabulary. Possible strong top. Might have 3 divergences. Hold on. I haven't done this one in a while. Magic 8-ball. Will my predictions and possibilities come true? Let's see. Oh, their reply is no. Guys, I do this out of fun real quick. It's fun. No, you're good, but it's fun to try to guess what may happen next, right? Where'd that picture go? Let me pull your picture back up. I killed it on the Magic 8 Ball. So let's go back to it. Boom, boom, boom. There we go. So the vocabulary is right? You're thinking this is a possible strong top. But what is it right now? It's a termination condition. Nice job there. I see where you got paid. So right now, all it is a termination condition, right? Why start thinking about what it could be? Let's talk about what it is. Right now, it's a termination condition. That's all. How stress-free is that, Jeffrey? Do you have strong triggers? No, of course not. They're inside. You have weak triggers into a termination condition. And one of the most liberating things ever is that you can just say, there's not a damn thing for me to do. And that's exactly what you did. You said, there's nothing for me to do. But don't worry about whether this will become a strong top or a strong bottom, right? Don't worry about whether or not a third divergence will print. Live in the moment, guys. This is a termination with weak triggers. No worries. So what creates the strong top? It starts with the termination. You're halfway there. So what has to happen? You have to have the reversal. So let's do this. Instead of possible strong top, let's go term with weak triggers. Needs to break or roll. And then I'll look for rules met. And then you can come back, because it's going to do one or the other, right? It's either going to break or it's going to roll. And then you'll have rules met. And then you'll look for it. So I know that you're working on strong tops and bottoms. So if you want to work on strong tops and bottoms, do this. Don't try to do it in the moment when you're thinking about trading. Go back historically. And then, Jeffrey, price reaches a divergence low. Let's go to one that is actually a strong top or bottom. Price reaches Fibonacci support. Absolutely none of the triggers break. Triggers roll. That's a strong bottom, right? That's awesome. Your trade doesn't set up till up here anyway. So it doesn't matter if this has the potential to be a strong top. You're using your rear view mirror for strong tops and bottoms to help you gauge the potential of winning maybe on a 50-50, right? Or the strength of something else. So in the moment, just let it be a termination. Don't worry about it. That's it. If it becomes a strong bottom, then you'll recognize it. Here's a pivot that reversed the market. Jeffrey, is that a strong top or is that a strong top or a weak top? And this is for everybody. That's weak, absolutely. No triggers through, reverse the market. Strong or weak? Weak. No triggers through, reverse the market. Strong or weak? Oh, try again. Absolutely no triggers through, termination that reversed the market. Strong. So Jeffrey, you don't need to be in the moment worried about a trade to learn strong tops and bottoms. So if you're going after them, right? If you're trying to learn them in the moment and apply them when they're not even present, you're giving yourself more to think about. Does that make sense, or does it only make sense to me? Sometimes I say things that only make sense to me, guys. It's okay to call me on it. In the moment, let's talk about what is happening. I don't have strong triggers, and I don't have a clear path, and I don't have a trade. Not going to overthink it. John, will you use the screencast link? I can't pick up your copy pastes in here. I don't know why. But if you'll throw the screencast link in there. And then Jeffrey, that was an awesome picture, dude, and another great lesson. And it's one of the ways that we try to outthink ourselves. We try to give ourselves more to think about than we really need in the moment. Christine says redemption. Let's see. Space between the triggers on the large chart. So you entered at 71 with momentum. But Christine, do you notice how you didn't enter until it cleared the area? That's a key part to success on this one. Is letting it get past the trouble and then entering. And then I can't see what happened. I see you entering more. I see you got in, you got out, you got in, you got out, you got in. How'd that turn out for you? 60 bucks? Nice. So what if, Christine, what if you took your first entry where everything was cleared, nice job, and held on to that one for $100? Instead of going in and out and in and out and in and out and in and out, just turn it into one trade. You're working really hard right now. You're a hard-working woman, Christy. Right on. Then keep practicing with them. But you're trading with momentum. You're trading from the other side of trouble. You did trade into a termination condition, potentially, but you embrace the momentum. And I think momentum is such a big thing, right? Momentum for the win is one of those things that we hear all the time, guys. And momentum pushes a market, and momentum can break areas, and momentum it's just warm fuzzies. All right, Jen. So check it out, Christine. The same concept, right? She lets price clear the trouble. She gets in once and gets out. Exact same trade, exact same reasons, exact same rules. And then once you get comfortable a little bit, that's beautiful. From 53, she took 40 bucks on one and 120 on the other two. So Christine, there's your daily goal on the exact same trade. You're going to be jumpy at first because you feel like you have something to lose. Jen, it's beautiful. Why wouldn't you trade a 4-lot on that? And Christine, all the jumpy that you feel now, it begins to go away with trust. And I think everyone in the room will back me on that. The more time you spend doing the exact same thing, the easier it becomes, the more confidence you have. So great job. You are a quick study. And for you guys that are wondering why I speak so familiar with Christine, I've known Christine for almost 30 years. Christine introduced my wife and I. She's the reason. Yeah, we are. And it's 26 years today married, Christine. Today's our anniversary. 26 of them. She admits that. Thank you. Check it out, guys. Odds favorable on a clear path. And then, Paul, it wasn't inside of favorable large triggers. And then once you're a chart reader, guys, you'll say to yourself, with this level of momentum, with this clear path, I'm willing to take a shot at a different. Thank you, Jen. Thank you, everybody. And here's one of those cool things. If we go back to the idea of this bad boy, we had momentum, we had a clear path. He just needed a little help on the entry area. You would have had 23 with one of your wives this month, Gino. I don't know how to interpret that. If I had stuck with the girl from high school, I'd be at 50, but but you guys, do you see how this works too? You had momentum, had a clear path. The only thing missing was the entry area. So he used Fibonacci resistance on every chart to define his point of entry. And I love it. It's beautiful, Paul. Great job. Gino, did I tell you I shot a 40 on the back nine the other day? Stopped out on marriage number one. Did you follow the rules? Did you have all the advantages? That's my best 9 holes ever, Gino. And you want to know the truth? Is I shot a 48 on the front 9, and then I kid you not, I heard you in my head say square up, and I wasn't doing that. I know, John 32. And I heard you in my head on the course, and I fixed the back 9. It was pretty awesome. I hope you understand what a positive influence you've had on my golf game. And I do appreciate it. All right, Miss Jen again. You're busy today, Jen. Termination. Strength off the bottom. Thank you, David. Clear path, out at trouble. 3 divergences sets the tone. Termination. Termination. We're going to Eddie V's tomorrow. You're going to play Incredible Golf Course tomorrow, Gino? Hey, while John Novak's in the room, you guys start telling him, let's get that Nexgen golf tournament going. Gino, you're my partner in the scramble. So Cindy and Adriana, once again, termination set the tone. Once those triggers roll, it's game on. Strong off the bottom. And then Jen, you're just absolutely crushing it. Absolutely crushing it. Great job. And it starts with that great bottom, and divergences confirm it. Jen, do you remember a week or two ago when you were so bored just waiting for the high probability trend trades? And now you've started seeing this one. And you're really catching it well. And then Christine again. It's funny how that works, right? Once you stop looking for everything, you start finding things. Waited for momentum to clear the 50-50. Jumped in. Jumped out. So Christine, you ready for your next lesson? This is beautiful. Your triggers never changed. So right now, you saying jumped out when the trigger started to weaken is you're just justifying the fears in your head, and that's okay. Totally normal. So I want you to try something just for grins, because you're on simulator. Every trade you take that looks like this, hold it for $100 and just tell me what happens. So when you set your ATM strategy, let me show you how to do something. Guys, for you guys that are developing courage on simulator, I built one that's called the Chili Dog even. You jumped out at 100? Are you sure? Jen, do you want to tell her how I see everything? You were in at 82, you got out at 86. That's $40. So on crude oil, if you get in at 82, you got to hold that bad boy to 92. That's your $100. But with this look, oh my gosh, make them come get you. 100 each contract. Thank you, Jeremy. I'm a man. I don't always communicate well. So Christine, just try it. See what happens, right? You're going to lose a couple. It's okay. It's simulator. So go to custom. And I want you to do this. I want you to do 2 contracts. Keep your stop loss at 12, whatever. And then under profit, 10. 10 ticks. Save as template. And just call it the Chili Dog. And then what happens if you jump in?
What order of bills?
That's it. It's either $100 or it's nothing. It's either $100 or absolutely nothing. Take that stress off of you. And then if you want to change your stop a little bit, put it on a reversal bar marker. See that yellow line? That tells me where this turns into a reversal bar. And just chase it. But do you see how there's momentum? If I never close on the wrong side of these small triggers, it's going to keep going up. So I can chase it on a reversal bar marker. I'm willing to lose $50 with this look. Pretty cool, right? So we'll see. Let's do this together, guys. If it never closes on the wrong side of these small triggers, it's going to keep going up. Does that make sense, everybody? As long as it doesn't close on the wrong side of these small triggers, I have absolutely nothing to worry about. So I'll just keep chasing it with this momentum right on the reversal bar marker. So now I'm risking $30. Whoop, hold it. Now I'm risking $20. And if that's enough for you, hell, go break even +1. But you're more likely to get hit right here. Momentum is everything, right? And you could even just hit close and grab a couple bucks, whatever you want, right? But learn to trust momentum, and I don't know what it's going to do, but we'll see. And management's the second thing, but Christine, you're really following some solid plans for that jump in. Pretty soon you're going to start getting paid on them. No, you're doing great. You've been at it for a week. For a week, and you're already taking trades that embrace momentum, that give you that clear path. You're already thinking in terms of advantages. Pretty good stuff. And then this was Jen. Momentum for the win. Look, Christine, it's your trade. You and Jen are in cahoots already. I don't know how I feel about that. And then see how she gets paid at trouble? Jeffrey Dean, do you see how she gets paid at trouble? Isn't that rad though? Boom, boom, pow, pow, money, money. That's all it's about, guys. It's just about getting paid. Find the easiest way for you to get paid. Find the fastest way for you to get paid. Find the most consistent way for you to get paid, and everybody's going to have a different way to do it, I promise. Clara, let's see what you have. I'm glad to see you posting again. I thought you'd given up on me. Not met, ACH. Anything can happen, triggers. Strong uptrend. Clear path, absolutely. Jump in, jump out. Jump in, jump out. And look at that. It didn't turn until you got the reversal bar. All of you guys are just crushing it. Who feels like they've been doing it too difficult by trying to find everything and are starting to believe the idea that a little simplicity goes a long way? Who posted this gap theory picture? Was that Jen? When do we not take trades with that momentum? When the path isn't clear. So when it hits a mid-band and the large triggers are a full bar away, Jen says, you know what? This is an inappropriate time to try that jump-in trade because I don't have a clear path. So it's got to be both, right? Remember when I told you guys that as soon as you can start talking to yourself in terms of momentum and a clear path, you'll be absolutely floored at what you can find to produce results. Once you have momentum and a clear path. And guys, the more time you spend saying, I hope, I wish, I want, the more difficult you're making it for yourself. You don't have to be in every move to do well with this stuff, guys. You have to be in the best moves. And you've got to be willing to get paid. And then Ron says, Jen recognized the gap theory. Ron says, hell, I'm going to get paid on it. Love it. Less likely to work when it's coming from a strong top, Ron. But look at this. Do you notice that he doesn't get in until price gets to the correct side of the small triggers? So Christine, this is the opposite of what I was saying. If he was short, there's no reason to exit till he gets to the wrong side of the triggers, right? If you're long, there's no reason to exit until you get to the wrong side of the triggers. So he's taking that concept and saying with the gap theory, I'll get to the correct side. I'll get to the winning side of momentum. And as long as I stay on that side, I should be pretty good. Beautiful trade, Ron. And Jen, let's not go jumping to conclusions. 100% of everything I say is not true. Ask anyone that's known me longer than you. But I try to stay pretty factual for you guys in the room. Everything regarding the indicators is probably true. And if it's not true, I expect you guys to correct me. All right, Miss Clara. Is this divergence line a termination condition on the large chart? Didn't see it on the small chart, so wasn't sure. Great question. It's a chart reading question. There you go. Which is why she still believes me, because it's not to her. All right, so Clara, let's talk about it. The two things that we're going to talk about. The first thing is that this divergence started right here. And the reason that it became true is because of the pivot with a loss of momentum on the large chart. So one of the things that you won't see, guys, one-to-ones on the large chart aren't going to print on the small chart. Divergences from the large chart aren't going to print on the small chart because they're unique to the swings and the moves on the large chart. Does that make sense, everybody? So if you're wondering why this divergence didn't show up, it's because it's unique to the large chart. These one-to-ones are unique to the large chart. Great question. Those are the things that I don't think to talk about, so thank you for that. So what happens, though, is when price reaches that divergence high line, it behaves like a line in the sand. And it could be a termination condition. And that was at 98. So letting it clear, right? Letting that problem clear before you go looking for your trade creates dividends. And there's nothing there on the small chart to create any worry, but we identified on the large chart knowing that a decision could be made there to mess up our good time. So great question, good lesson. And I don't know if you had a divergence on the small chart from here. You may have. Sometimes they do correspond, but not always. They're not obligated to. Great question, Clara. I hope that cleared it up. If it didn't, let me know. I'll find a different way to say it, I promise. Let's see if I can get John's picture to open. John, that gold trade you popped in, if you wouldn't mind giving me a screencast link to it, for whatever reason, Discord just isn't allowing the copy paste to open. And I do like it when I get a John Novak trade in here. Because this is a great lesson. There it is. I got it. I got it. All right, so let's go through this one. Because this one's got an awesome lesson on it. These are the things that John Novak will take for granted that you'll have to think through as a new user. So let's go through the exact same rules, right? He didn't annotate because, hell, he's John Novak. So you guys, let's annotate it for him. Let's go after the guy that wrote the software. Did he have odds favorable momentum? Did he have those strong triggers that are required for a high probability trend trade? What do you guys think? Yes, D, I agree. Did he have a clear path? Price didn't reach an area, no trigger, right? Did he do it right on the large chart? Did we have 66% of our advantages? What do you guys think? Is the path clear? I'll move this out of here. There's a big pink line up here. Hell yeah, I had a clear path, right? So, all right, John Novak, so far you're 2 for 2. Large chart rules are met. Let's go to the small chart and take a look. So he waited for the reversal bar. I do like that. Let's talk correction points. So price is likely to return to the large triggers on the large chart. Price is likely to return to the large triggers on the small chart. So on the small chart, there's his large triggers. Notice that there's no lines inside of it. And there's also no entry inside of it. And then here's his second correction point. And the lines are before the correction. And John knows that if he enters at these lines, these areas for a bounce, his stop has to go where the market shouldn't. So by waiting, by being patient, by waiting for those lines, even though they're above the triggers rather than inside the triggers, he's willing to take this entry right at the one-to-ones because of the strong triggers, because of the clear path. And his initial stop, I know my brother, was down here where the market shouldn't go. Acceptable risk with that large trigger. And then look what he did once he got the reversal bar. He's got 4 ticks of risk on the trade, guys. And he's saying with this look, from a bad top, he's going the distance on this one. And we'll see how it turned out. I don't know if we have an after picture in there. But his entry is spot on, 100%, and virtually no risk once that market starts moving in the direction. And it's kind of cool when the CEO of the company, it's pretty awesome, when the guy that wrote the software that's been teaching people to trade for 27 plus years posts a picture in the room doing it exactly the way he teaches it. Everything that you guys get, he does. There's a reason, because it works. It's not his only trade, but it works. All right, Andrew Z. Weak top, strong triggers, clear path, perfect entry, didn't work. So, Andrew, what did you do wrong? What did you mess up here? You had strong triggers, and you had a clear path, and you had an area inside of favorable large triggers. Andrew, I can't for the life of me find one thing wrong with this trade. I can't find anything wrong with this trade. Even the second lower divergence added fuel to it. And Andrew, this is such a perfect example of a high probability trend trade. This is such a textbook entry with all the advantages and 32 flavors of awesome that I'm going to drop this into my spreadsheet on what people should be looking for entries. Because this is Andrew Z's perfect high probability trend trade, and guess what? Didn't work. And Andrew, anything that wins 70 to 80% of the time has to lose 20 to 30% of the time. And what you're doing is you're saying, I trust the methodology. I believe in the momentum. There's no doubt in my mind it's a clear path. I'm willing to take this trade and put my stop where the market doesn't go. And guys, when you take a loser on the perfect trade, if you annotate your charts, what you realize is that you took the perfect trade. And you become okay with it. And perfect, Andrew. Everything about it was perfect. Every rule was met. It was perfect. It just didn't work. Ron had a big ugly fib there. So you probably wouldn't have taken this trade if you had Ron's charts. Let's see. Same time frame. Do you clean out data every day, Andrew? 1047. 1047. Sometimes there's little discrepancies in tick data if you clean it out. Sometimes Ron's had more fibs than me too, though. I don't know if I had a fib there. Let's see if I had a fib there. I don't even have NinjaTrader up. You reinstalled yesterday? Right on. That's about the equivalent of clean data. And sometimes it changes. Sometimes you get this little tick. So I always encourage people, trade your charts, right? Don't try to trade somebody else's charts. That's a recipe for disaster because that gives you too much to think about. All right, so Ron, let's see what Ron did. Can anyone guess? Ron waited for momentum, and when he had it, he made sure that he had a clear path. And then once he had the clear path, JTFI, $100. I mean, it just doesn't have to be hard. Ron, beautiful. Chili dog. I love that this is the chili dog trade now. Ron, you have a legacy now, my friend. It's a great trade. It's an awesome trade. And it relies on those first two advantages, guys. The same first two advantages. Yeah, it's time to order more robes, without a doubt. But Christine, give me a why if you see it. When you have these advantages, it's not difficult to find $100. Just learn to trust it a little bit. And he goes for 110, from 47 to 58. And as long as he is left of those trigger lines, he's good. And you'll develop that trust too. And guys, I'm telling you, it's solid. It's such a solid trade because it has the advantages. And the advantages are what really set the tone. So I'm opening up my Ninja Trader again real quick. I'm struggling today. So my brother sent me a message the other day. On the browser version, the fibs are lining up. And that's been a struggle for the last month. And the fibs are lining up, guys. And that's really the piece that he's been working on with all these programmers. So it's so stinking excited right now. It's one of those so close you can taste it kind of things going on. I love it. I'm so excited about it. I'm going to drop a little Mark Douglas on you real quick. Guys, for those of you that don't know, for you guys that like the psychology side of it, and I really do, I'm a big fan of the psychology of trading because there's a lot of emotions that go in trading. This is a cool little snippet. And my brother worked with Mark Douglas back in the 90s. He spoke with him often. And Mark Douglas is no longer with us, the late Mark Douglas. But in regards to trading psychology, there's so many things that he talks about that are so impactful if you go in and read some of the stuff or watch a video or two. And one of the first ones is, am I in the right frame of mind to trade? Am I in a good position, right? Do I feel healthy? Am I hydrated? Did I sleep? Am I hungover? Did I accidentally rip a bong hit before the day started? Man, maybe I shouldn't be trading, right? So always, where are you at? Are you good? Where's your awareness? Ask yourself that every morning. Am I in a good spot to trade? This one too, and I sent a message this morning. Believing that you deserve a high level of profit in order to keep it. Gino, you know what? Life happens sometimes, right? I wasn't sure if anyone caught that. And what I found is that if you're blue collar, the way I was, guys, I was a mechanic and a bartender. I worked in the restaurant industry. Making $500 to $1,000 a day wasn't the norm. It wasn't at all anything that I was used to. And it took a while to get used to it. It took a while to feel like that wasn't such a large amount of money that I didn't deserve it. And you do, because you're working hard to get there. So believe that a little bit. And then learn to trade without fear, guys, or internal conflict or hesitation. And you have to learn to believe that you don't know what's going to happen next on a trade-by-trade basis. And you can still make money. You'll never know the outcome until the outcome is clear and present and happens. But you can be sure that you're trading a pattern that wins more than it loses, and that's where rules come in. And when you stop expecting to win every trade, you're going to find that you start winning most of your trades. Because you don't care about the result. You care about the execution of the method. Whether it's a high probability trend trade, whether it's a momentum trade, whether it's that white bar trade, whatever it is, when you focus on the execution of the method, you're guaranteeing yourself that it's a trade that produces a statistical advantage, guys. And when you believe you know what's going to happen next, like most of us did in the beginning, or still do, that's when you set yourself up for failure, guys. All the emotional pain that you create as a trader is self-inflicted. It's never one trade. It's always a collection, guys. And there's nothing more than up and down ticks in the market. And we're learning how to capture them. We're learning how to take them with the highest probability. So read this one. I dropped it in the room for you. It's a great read. But the psychology of trading is a very real thing. Pete, let's see what you did, my friend. Pete says, and I love this, where did you get long? Extended uninterrupted run into the big fat fib. How did I know that was the big fat fib? Guys, this is a 21 range, or a 21.3. It's a higher time frame than the 13.2 fib. And Pete has recognized patterns to the point where he's begun taking advantage of it. And check this out. Termination condition is a market stopper. And I can't see where you went long. Did you go long to get to it, Pete? Or did you try to sell everything off? Not at. It looks like that's an exit. And you're trading 25 contracts because you're working on getting used to it. So that was an exit. So beautiful exit, get paid, and then the Pete bounce. You found a prop firm that offers a $1 million account. You're trying to get a feel for what it's like to trade that many contracts. I think that entries are going to be the only thing that you find changes, Pete. Being able to fill 100 contracts at the same price is difficult. But your rules should stay consistent, right? Your rules should be exactly the same. You'll find that your fills are a little different. I've done that before. I've traded 100 lots on simulator, and I've seen like entry over the course of 5 or 6 ticks as they try to find someone to fill the other side of your trade. And I think you'll find, Pete, that that's really going to be the only difference. But keep trading your great rules, man. When everything says up, go up. Notice that it's weaker at the fib, that he's not fighting a whole bunch of strength. And gosh, this one terrifies me, but you do it better than anybody. Nice job. Great trade. Weak triggers at a fib, straight to support, gap theory back to the fib. You guys want to see something pretty cool? I'm going to take this picture right here. And this is crude oil September. And all 8 have hit. That's awesome. I think you're focusing on the weak triggers, and that's helping a lot. It's terrifying. It's everything counter trend trade in the world. John Novak, for the love of fuzzy, use your screencast account, please. I can't always open your pictures if you copy paste them in. I want you guys to see this. If I go to tops and bottoms, and I'm going to take this picture right here. No, it is not Nexgen rules. Nexgen rules create a foundation, Pete. Wouldn't you agree? Once you learn how to do it the way we teach it, you're going to find more opportunities. And the more time you spend with Fibonacci, the more you develop this outstanding respect for it. All right, so guys, this is from the educational material. And this picture was taken in 2021 on the S&P. Pete's bounce trade, Jen. So this is from 2021. This is from right now. That's pretty similar, wouldn't you say? Price reaches resistance, bounces all the way back to support, the large triggers don't follow. And now it's a pivot stop out with the smalls below. Guys, it's the exact same look. John, what I'm saying is that when you drop just the copy paste in there, this is what it does to me. And I typically can't open it. Sometimes I can. And sometimes I can't. And now it's going to let me because I tried to give you a scolding. Gino, Goldman account 1, let's work on 2. Love it. Congratulations, dude. So termination, full reversal, odds favorable. Notice how he gets in on the little snapback. And then down. Just a momentum trade. You got in on the wrong side of the one-to-ones. Just saying. But it's perfect. With this level of momentum, with the strong top, with everything going down, odds favorable, John says, let's go. Half off. Notice that he's saying if it gets to the wrong side of triggers, and if it runs, it runs. Cool. And if it doesn't, he makes money twice. No big deal. It's just the peep bounce trade. That's all it is. Acronyms. Nice trade, John. Momentum for the win. Clear path. Holy crap. Over and over. Momentum and clear path. That's beautiful. Odds favorable. Clear path. Pull back to resistance inside of triggers, and down it goes. Jeremy, it just doesn't have to be difficult, does it? It just doesn't have to be. But we make it difficult. We try to. Every day we try to. I love simplicity. My brother will tell you I'm not a smart man. Yeah, Rob, NASDAQ is not for anyone that doesn't know their rules in a fraction of a second. And Pete, it only works on crude. That's nice of you to share that, for sure. See, things that people wouldn't know. Guys, NASDAQ is crazy. NASDAQ is insane. If you can't identify your rules being met in a fraction of a second, guys, it's tough. Notice that the large triggers never rolled. Jeffrey Dean, this goes back to that, hey, this could be a potential top. Your large triggers never rolled. Support never gave any idea that it might break, right? Or that it might hold. It's kind of cool how that works. Just live in the moment. It's either going to break or it's going to roll. It's fun. All right, guys, I'm going to take 2 minutes and then I'll come back. And then if you got them, post them. If you have a question, ask it. Let's finish strong. This has been an awesome class so far. I'll be back in about 3 minutes. Like peas and carrots. All right, y'all, let's turn some microphones back on and let's finish the day and see what we did. John, hopefully I'll be able to get yours. We'll see. Sometimes I can get those copy paste, sometimes I can't. I forgot though, John's screencast is broken. Yeah, see, those won't come up for me, so I'm going to click on this one. Thank you for that. And Jeremy, it's just pretty much the same thing you said, right? All the momentum, right back to a mid-band, right back to a mid-band, right back to a fib and a mid-band. And all the way down. Jeremy, this is the exact same trade that you posted. You and the CEO are in cahoots. And then John said he was run over like nobody's business. So what did he do wrong, guys? He had odds favorable momentum. He had a clear path. He had a pullback to resistance inside of favorable large triggers. What do you guys suppose he did wrong? D, you're almost right. He traded gold. No, I'm just kidding. Guys, that's the perfect look. It's a cost of doing business. Gold is a little temperamental. Gold is that angry girl in high school that drove through your lawn and toilet papered your bushes because she was mad at you. Allegedly, that never happened. Or did, but guys, sometimes they just don't work. Sometimes they're perfect and they just don't work. And I think that's one of the things that maybe we forget. And guys, I'll tell you right now, you've got the greatest software in the world. You've got the most solid plan to find success. You will lose. And I'm not scared to say that. Like, I don't have any hesitation saying that every trade that you take won't be a winner. Oh, I can't wait to see this. What gold looks like as a person. If this is my ex-girlfriend, you're in trouble. Yeah, probably pretty close. Pretty enough to lure you in, but pretty suspicious. Awkward mean girls. I love it. So how are we doing today? Guys, we're coming up towards the end. We got 20, 25 minutes left, whatever. Are there any concepts that we've talked about that you want to talk about again? Are there any looks that you're working on that maybe you want to talk about again? Hey, Red Rob, did you catch that gap theory right there? When price smacked into these areas and the large triggers were a full bar away, did you see that? Saying no more shorts, no shorts. Nope. That's a good look. That's a good one for study. It happened again right here. There's that look again. I think Jen posted a picture of that one for us. Just crazy. There it is again. It's all right. You will. You'll start seeing it. Because if you talk about it a little bit every day, you start to see it. If I keep pointing it out, like eventually it just clicks. It's the weirdest thing ever. It's almost as though doing the same thing every day creates this awesome recognition, creates the ability to pull it out of a hat. Like, oh my gosh, that's totally the gap theory. Don't even have to think about it. And that's the whole goal, guys, is to keep doing the same thing over and over and over again so that eventually you find yourself on autopilot. So that's this part of it. You've got to learn the looks so that it becomes easy. And Jen, I think it's probably one of the most underutilized ways to get great at what you do is everybody initially we're hyper focused on advantages. We're hyper focused on momentum and a clear path in an entry area. But the reality is, guys, the same way you know to go at a green light, you've got to know to stop at a red light, right? And Novak men are notoriously bad with analogies. Rob, I noticed it everywhere, but I've probably taken 500 pictures of it. So it happens. I don't think I talked about the leverage of a 2-lot being better than a 4-lot. I think, Paul, the more contracts you put onto an account, the more leverage, right? And it just means that there's more risk out there up against your potential loss. So you're risking less with 2 than you are 4. That's it. And when you talk about over leveraging, and I don't know why they use the word leverage, people will take, and we'll use prop firms as an example. People will take a $50,000 account and they'll trade a 10-lot on it, right? And if you lose that trade, you just lost $2,000. You just blew out your account. So the idea is that you don't put yourself in a position where one loss ruins your day, kills your account, kills your funding. And it's typically a percentage. And there we go. And again, John hates me, so he's not posting the screencast link. Why sim millionaires exist. I'm going to take a picture of his picture because I can't get it, so. But this is very true, guys. When you have zero risk on the simulator, the testicular fortitude that comes with it is just overwhelming. And then when you start risking a little bit of your account, right? A 1-lot feels safe. A 2-lot gets a little nerve-wracking. A 3-lot, you're like, oh my gosh, I can lose a lot of money. And a 4-lot, And then once you get beyond that, right? Once you start risking heavy, guys, your confidence goes down. You start getting scared. And this is one of the reasons why there's people that if you're always taking these quick pops, focusing on getting paid, your confidence stays really high in those trades. And when you start, I'm going to take a 50-lot, and I'm going to go after it. And that's why Pete said, I'm just getting used to the feeling. I'm just getting used to the feeling of that level of exposure. And it's all proportional. But look at the size of your account, right? And if it's a $1,500 account and you're trading your own money, $100 makes sense. That's almost 10% of the account on a loser. So even that is, you stay real focused, and that level keeps you focused. So thank you for that picture. There's a lot of momentum. And it all started from a termination condition, didn't it? And off it goes. Here we go. We'll put the chili dog in there. You guys want to see if it works?
Order Bill.
Just for grins. Large chart says odds favorable, clear path. These 1-to-1s might create a bounce. They might not. I don't know. Let's see what happens just for grin. Guys, this isn't a trade that I teach, and I might be doing it wrong. I don't really have odds favorable momentum on the small chart. I think that's the one thing that I have to notice here. Both small triggers have to be beyond the 1-to-1. So this is when, and this is kind of cool, right? Is I just jumped in. I looked at the large chart and I saw, hey, look, all the momentum. But I maybe didn't give myself the best chance of success because my small triggers didn't clear the trouble on the small chart. I actually knew that. I was hoping John didn't point that out, but he will because he knows rules just as well. And Ron probably made money on the way up there. Ron said, well, you go and try it after. I'm going to get it there. Odds favorable, clear path. He clears the divergence high, and he gets paid. I love it. Ron, consistent, 100%. 100% consistent. And guys, this is why you let trouble clear. Do you see how it's stuck? Do you guys see how the market slows down when there's a line? There's a good lesson right here. And kind of one of the reasons why I wanted to get in just right there. Because lines, when you're looking at just jumping in, lines are places to get paid, guys, and then you got to let them clear. Because if all you're relying on is small chart stuff, well, then you got to recognize small chart lines. The large chart leads the way, but the small chart's going to let you know if there's something in the way. With an up bar here, I'm going to go 2 ticks below it. I'll follow it on the reversal bar marker. And as long as I stay left of these small triggers, guys, I'm golden. As long as I stay left of the triggers, I'm good. So we'll see what happens. D wanted to see. D said, Mark, let's see if a reversal bar on the wrong side of the triggers really creates a pushback. Guys, I don't trade this trade. This trade isn't in my plan. But we'll see what happens. John, we're going for a $100 target. And then John is right. John's like, there's going to be a point in his life where he'll move his target up to here. But right now, we're going to try and capture $100. Ah, boo. What do you guys notice about the stop? It's behind the line, too. That's kind of nice. Is I've actually got a line between me and my stop. I've got something protecting me there. I've got momentum. My path is clear. I've cleared the trouble. This is it, guys. It's not a high probability trend trade. This is a JTFI. This is a jump the fudge in. Man, and I'll tell you what, Morgan, that voice is loud. But you could make more, but you could make more. And you'll also get the what if, right? What if it turns? Just take 20 bucks. What if it doesn't turn? Put your stop way out there. You will always look for the other side. It's funny how that works. I don't know if it's human nature or what. On these trades, you could do this. Here, watch this. Whoops, let me turn this to one contract.
Order submitted.
So we'll do John's stop, John's target, and the $100 target. So you can run separate targets, right? Until I get a close on the wrong side, I'm in this one. And guys, we're just killing time. If there's something that you guys want to talk about, let me know. Awkward silence. Oh no! Everyone's staring at the chart in suspense. Shoot, I don't care. I'll go grab something to drink. John says he would put it... There we go. I say if it goes below, if it closes on the wrong side... Jeffrey, that was a target. That was a target. Since I bought, a sell closes it out. John, the only thing that we were doing here is talking about the idea that when it gets to the wrong side of the small triggers and closes, it may push down. That's it. We're not talking about the next trade. We're not talking about the profits. We're not talking about anything other than the idea that once this reversal bar prints, it may push lower, and you just don't know. So even your second 2 ticks below would have been stopped out as well, right? And honestly, 03 is a momentum trade. And that's it. You're absolutely right. But we were only focusing on the one. We were only focusing on one thing. That's it. That's all. Just one thing. Is it going to go up from here? It could. Or it might push lower. I don't know. I'll never know. I never have any idea. So, guys, some of you are going, oh my gosh, Mark took a loser. I can't believe he took a loser in front of everybody. It's a lesson on where am I in relationship to the small triggers. That's all it is. And then, John, you took a momentum short right on the correct side of the 1-to-1s and got out 1, 2, 3 divergences in the same price range. That's a pretty good look, isn't it? And it hasn't stopped going down yet. And guys, this is why I say when you're on the wrong side of those small triggers, there's no reason to hold a momentum trade. So there's the second half of the lesson, B. You guys know exactly what the beginning of failure looks like. It just works on stop placement. Pretty cool, right? And then this was Ron's trade. Whoops. He did not use a horizontal line. Let me get my arrow real quick. Notice it, there wasn't a close on the wrong side of the triggers and it was pretty easy. Man, Ron, enjoy your weekend. Thank you for the anniversary. I'll see you on Monday. Actually, no, I'm not here on Monday. I'll be back on Tuesday. John's going to be here on Monday. And Pete, you are so right. We deal in probability, not possibility. Because it's always possible that the market could go up or down. Yeah, you guys get John Novak on Monday. So, man, Ron, you picked the right day to miss Monday, the right week. Whew. I love it when John teaches a room. Because it means that I get the next 5 days to unconfuse you guys. Not really. He's got gold. Nobody reads indicators better than my brother. And he's going to keep it. He's going to keep it simple for you guys. He might, Christine. He might make you cry. If he does, there better be a video because I haven't seen you cry in a while. I miss it. But guys, it's going to be an awesome opportunity for you guys to ask any questions that you have about what's going on and all that. Don't sounds like quantum theory to you. Yeah, he just read that. He was running the room every day, right? When I started too, Pete. When I started too, it's funny, we read the indicators 100% the same, guys. We read the indicators 100% the same. And we have a different trading plan from one another. I'll admit it, my brother is braver and more confident than I am. And I'm pretty freaking confident. Well, hopefully that was your last day forever. Keep getting paid, it will be. Paul, have a great one. John Novak taught me, Rob. I like it, Ron. John Novak taught me. That's it. Actually, you want to know the truth? Is when John first started to teach me 4 years ago, this is what he told me to do. And it's kind of funny. So I know that he's successful. I know that it works. I know that he's been teaching people to day trade for years and years and years. And he said, hey, Mark, just take some pictures, use the spreadsheet, post them in the room, let me give you feedback. I did not do one of these things, not one of them. And I got exactly what I put into it, absolutely nothing. There was a giant sucking noise in my account. And then I regrouped and I said, all right, he might be good at this. And sure enough, once I started listening to him, I learned how to read my indicators. And then once I learned to read my indicators, I learned to follow my rules. The path has never changed. The path is exactly the same. And you get to decide whether or not it's going to be hard or not. It's funny that you're in control of that. You're in control of whether or not it's easy or whether or not it's difficult. And human nature says it's got to be difficult at least once before it becomes easy. Because if we don't touch the hot stove, we don't know not to touch the hot stove. And that's it for me, guys. I'll be back tomorrow morning at 9 a.m.